Welcome to Custom Homebuilders Solutions, also known as CHS, a job costing, full accounting, and profit management software designed specifically for the professional home builder. Hello everybody, this is Carol King, the developer of Custom Homebuilders Solutions. And you'll notice on our intro clip as it opens, it says this is a powerful job costing program designed for the professional home builder, but that it's a job costing, accounting, and profit management software. And that's what we're going to talk about for a second, is the profit management software, by taking a look at what is behind the owner review button. This owner review button does require a higher level of permission because it has information about cash, about profit, where profits are headed, this and that perhaps people with a different level of permission that shouldn't be in all of the accounting and everything will not be able to open this owner review, and that is why it's called owner review. So let's go ahead and click this button and get started. Now, for one thing, CHS is so busy going out, and this is one of the beauties of being combined with your accounting database. It's so busy going out and gathering numbers from your accounting, from your budgets, from your change orders, from your purchase orders, totalings of cash flow, of payables. So if you have a ton of accounting records, this could take a few more moments to open than what this one did right here. This demo company that we use doesn't have just too many tons of records. So let's talk about this window for a minute. It says, note, if you open and change the budget worksheet, and you can do that by clicking on a budget amount here and the budget worksheet will open, or if you open the ECC and change it, you should be sure to use the refresh button here. A lot of these, if you open some of the things, you'll see that it is refreshing, but by the way the ECC opens and the original budget opens, I can't tell it to go ahead and refresh if you open those and close them. It's just a programming thing. So let's see what we've got here. It says, important, the current profit status of a job is very dependent on accurate estimated costs at completion, which we call the ECC. Click on an ECC amount to update it as needed. And you can click on these amounts, open the ECC worksheet. You might be check marking some actual costs that have been posted, that they're all done, things like that. If you watch the estimated cost at completion, click to drill down on an ECC worksheet. You'll have several tools for adjusting your ECC, whether you put in a revised amount. It pulls together all the numbers from CHS, all these kinds of numbers. But if you do an ECC worksheet for one job, you might be adjusting it, and again, you'd like to refresh it. Also, for space, we don't show the whole job addresses down here, and it says hover over job codes to see the job address. So you can see if I hover, you'll see the job address popping up, and also it will include the owner's last name if it's there, if you did it on the job setup. So you can see how I'm doing that. That's the thing I wanted to point out there. So first of all, this first block here is the profit status of open jobs. It shows the original estimated price based on the type of job that it is, whether it's fixed, cost plus markup, or cost plus fee, and we'll kind of look at that here in a second. Shows your original estimated profit based on your original budget that you did, and maybe a price you typed in if it was fixed, or the original profit based on your job budget plus some cost markup or plus a fee. But your original budget was based on that. Then the revised price will be based on changes in the estimated cost at completion. Perhaps you've issued some change orders, perhaps you have some allowance adjustments that are driving it up. And then the current estimated profit. Now over here you can see, in this case, the profit is estimated to be higher than we originally thought by 3,000 something. And in this case, it's in red. We're estimating it to be a bit lower. And if you get concerned or wondering about that and about where that number came from, you can click this magnifying glass. And you can open the same window that you can open when you're setting up budgets to say which type of job it is, fixed, cost plus fee. You can enter a desired profit percent to have CHS calculate what your price would have to be to get that profit percent. There's a question mark button here to tell you the difference between a markup percent and a profit percent with a little candy bar example. Also on our home menu, we point you, I think, to a good video that somebody did about markup versus profit margin. And it'll show you what markup percent you would need to apply if it was a cost plus markup or a builder fee to get this profit. This is very low. We were just doing this in a thing. We actually typed in a price in some other demo based on our budget marked up that we did, and you can watch stuff about budgets and marking up. But anyway, we called this one a fixed one, so we had this fixed price based on what was typed in here, minus the job budget, and here was our estimated profit. Then our fixed price plus any change orders issued, which you can drill down on, or an allowance over under adjustment, which you can drill down on and see where that came from, causes us to have a revised price. The revised price minus the current estimated cost at completion, which is changed, based on, say, you issue a PO for higher than what your budget was, or you post actual cost for higher, or you issue a PO for less and check mark to have the ECC equal the lesser PO. This current ECC will be moving every day as you make changes to your accounting, post actual costs, and do POs, etc. So the current ECC, you can drill down on it here to see where that number came from. But your revised price, which we got over here, less your current ECC, is your revised profit. And that's how we got that profit difference. Now notice that the ECC, 287,436, is a little higher than the job budget. Let's take a look at that part of things. Now notice down here for that very same job, we show the ECC is over budget by 3,077. The reason the profit isn't down that far is because we also added some change orders to our revised price and a little allowance adjustment. So it's probably the difference between the ECC over the amount of the change orders and the allowance. But you can drill down then, down here looking at the various ECC. Like I said, this will show the original budget, change orders that have been issued, etc. But let's first of all drill down on the ECC worksheet, which once again, CHS is just going and gathering all kinds of stuff for you to help you determine your ECC or your estimated cost at completion of the job. If you watch the help, you'll see tools for marking. Let's say plan cost, we budgeted $16,125, we posted actual costs, and if we drill down, we just decide that's all the actual costs we're going to post for whatever reason. It may not make sense right now, but so you check mark that the actual costs are done and your ECC has gone down to equal the actual costs. So your total ECC would have changed to 286,811 and over budget being 2452. You might type in some revised amount right here just because you haven't issued POs and original budget, etc. You know the price will be a certain amount, and that revised will take over and be your ECC. And you can review all of your estimated cost at completion for things that are going over and drill down on maybe some notes about it for why it would go over in case people in the field wrote notes either about on the purchase order or when they were doing work done approval or when they were approving some actual cost bills. I won't go into all of this too much more because there's extensive help videos about how you use this ECC worksheet. But notice that I have changed it so that it's over budget only by 2452.13. So if I go back to my owner review, I'm going to want to click the refresh button. And now you'll see how this has changed. And you'll see my estimated profit is not quite as going under quite as much as it was. And this is how much the ECC is over right now. So the numbers in red are things you want to drill down and investigate. Again, you can watch the videos about setting up a job budget, and you can drill down and open the budget worksheet from right here. You can look at the, this column has approved orders, change orders, approved change orders, and their estimated costs, not what the price is to the customer, because this is about your costs, this screen back here. So it's the total of your estimated costs. When we're figuring out estimated costs at completion, we're using the estimated cost that you put in for the change order, not the customer price. So we add those two together for a total budget. We can drill down to see what purchase orders have been issued and costs that have been attached to the purchase orders, if we like, by drilling down on that. And you can see that if you do a results report is what you'll need to do to get the grand total that ties. But this is showing you POs, it's posted costs that have been posted against those POs, any over under. Here's some PO we just randomly issued for some test job. Some posted costs we posted, but we didn't have a PO. If you want to quickly make a PO for some costs that you didn't have a PO, there's a button here to do that. But this screen is also explained in depth behind the help button. If I do a results report, you can also just search for certain vendors, certain cost codes, things like that. But right now this is showing everything. But if I do a results report by vendor, it's just showing everything for the vendor, their POs, their actual posted costs. And the total of the POs at the bottom, 340,076, is the number that you're seeing here for total POs right here. And you can drill down on the actual costs that have been posted, actual job costs, which means these have been posted to accounting, as most of the time accounts payable bills that you're paying, and they've been given a cost code other than 0 so that they're marked as job costs. And you can review them by cost code order. You can do some searching for certain cost codes, certain vendors, paid, whether they're paid or unpaid, all kinds of things, certain descriptions, and search, and then do a report. If I do a report job cost by job, then cost code, I can see a report of my actual costs, 189,975.67. I can also, if I suddenly realize I need to edit something, use the edit button there, and you need to watch other videos about editing and that kind of thing. But that's how you can review the actual costs that have been posted. And just in case I did do some editing, it does a quick refresh. Now this part up here is showing you the cash status of open jobs. Down here, this is the estimated cost at completion of open jobs. And by the way, I should mention, this is for jobs marked as active that have not been marked as closed and that have a budget. To do estimated cost of completion, we need the budget. Profit status, it's for jobs marked active, not marked closed, that you've done something with that contract price, and let us know about it so that we can have an original price, etc. And it needs the budget so that we can figure out what your original estimated profit is. So that's the jobs that'll show up here. You'll need to have all those things, or some other job that doesn't have those won't show up. You also might want to, for speed in opening this, if you have a lot of jobs that you have not marked as closed for whatever reason, you might want to mark them as closed so they won't be part of these totals that you see up here. The cash status of open jobs is also for active jobs not marked closed, and they do need to have some actual cost for this to actually work, like at least one actual job cost has been entered for these. And the cash flow balance, if you drill down on it to see what that's about, and this is a great tool in CHS, is that you can track cash by job. And this opened at the bottom just because that's where I had it last. But notice that this isn't a good one to show you because it's one I was playing with and doing stuff. Let's look at our demo job that we've been doing a lot of entries for. And let's just take a look at that cash flow for a minute. First of all, you can see all the entries we've posted to our GL account for direct construction costs, whether they're paid, whether they're unpaid, what vendor, what amount. And so those are minuses to our cash. Now some of these are unpaid, so they're really not minus to our cash. So if you continue on down here a ways, you'll see accounts payable, and these are added back in. That's how an accounting cash flow works, is open accounts payable is actually considered a source of cash. So you'll have to realize that the unpaid ones are going to come along and be added back in to calculate the cash balance. And then monies we've received that we put in construction loans payable will of course increase our cash. Here's a contract down payment, increased our cash. Here's accounts payable, increasing our cash back up for the fact that we had some entered somewhere else. Here's a couple of other things. But what it's doing is combing through your database and finding everything entered for the job. and then being able to come up with what the cash balance is here. And you can call and ask me more questions to help understand that, but it definitely is coming up with the cash that's been contributed by accounting records that have been marked with that job. Then it will give you a list of open accounts payable posted for that job, for that open job. And you can see those here listed by vendor and study on those and where that number came from. And so then it shows you jobs cash available, and that's open jobs cash available. So there was your minus there of your cash balance, and then taking away accounts payable, cash available is minus 67 here. Now we have a positive cash balance on this one. We have accounts payable out there of this amount, so really cash available is just 28, not the amount we have in cash. So that's what that review is about. This doesn't mean you're overdrawn in any bank account or anything. It's just, this is a line just for how much that job has contributed to cash and how much accounts payable is out there for that job. Now over here is a little thing that has nothing to do with open jobs. It's just for information purpose. So you can see that the total cash for the company is actually $209,000 in our bank accounts based on what we've posted in accounting, and you can see which cash accounts that is, 209,802. This report actually also holds what your credit card payable amounts are, and a minus amount means that we do owe that. That's a credit balance, and to put these on the same report, it's going to show up as a minus, but that means we owe, that means it's a credit balance in a credit card payable GL account. And so that's the total of our credit cards right now, as far as what we've posted in CHS, as long as you've posted things. So you can see those two things. That same report will open if you click to drill down on credit cards. And if you want to see all of the company accounts payable right now that have been posted, you can do that, list it by vendor. This is everything, whether they're posted to a job or not posted to a job, etc. The entire list of bills that have been entered for accounts payable. So that it'll show the net of those. I didn't even know what to call that. Net cash available, something. It's just the net. It's your total cash minus what you posted to accounts payable minus your balances and credit cards. CHS does a lot of things like draw requests that you can do for jobs which may or may not be posted to your accounts receivable. A lot of builders just use the draw request forms, which are great in CHS to gather costs for cost plus markup, or let you do a % complete draw request. And it's up to people whether they want to post those to receivables or not. That usually adds some added complication for a bookkeeper that may not totally be understanding accounting, so sometimes that's left alone. So I don't come along and do plus accounts receivable here. There's a reason for that. I don't want it to end up being misleading about your cash by increasing it that much. So I decided to show cash less accounts payable and credit cards. So anyway, you also, if you want to expand on this report about profit and about cash, on those lists, you can see a long, wide report that's giving you more detail than these little boxes are. There's the original price, less original budget, and that this is a cost plus markup with a 25% markup. So our original estimated profit is this. It's actually this original price will be this amount that you budgeted plus a 25% markup. So that's your original stuff. Here's your revised, and you can tell where it was revised from, since it's cost plus markup is this estimated cost at completion plus a 25% markup. Gives you your revised price calc. This is on cost plus jobs. The revised estimated profit for each of these jobs listed here, how much revenues have been received, revenues remaining to receive based on your current revised price, actual job costs have actually been paid, total costs remaining to pay, which is the total of your estimated cost of completion less paid, net cash due in or out would be revenues remaining to receive, costs remaining to pay, less costs remaining to pay. There's that cash flow balance that we were drilling down on, and then less the accounts payable, and there's the job cash available, which is the same as what we would see over here. So that's what you can see why this is a good quick review screen for an owner of the job to just of a company, especially since it's probably a custom home building company. It's all about job costs and where your profits are heading on each job. So I hope you find that useful, and thank you for watching.